A little more than half an hour now till the opening bell on Wall Street. Rejoining us now, Stephanie Link for this is almost like where they clap enough at the concert and then they come. Sometimes they come back a second time. So you may be on Squawk. It'll be like a third time on Squawk on the Street. Hightower Advisors, Chief Investment Strategist, CNBC contributor. I don't want to rush things, Stephanie, because there's a weekend. But I'm told next week we're getting the banks. So it's going to come fast enough. But let's go ahead and talk. What should we be looking for? That could be the next market-moving event, do you think, for tone?
Yeah, and this is my lucky day to be on twice with you, so thank you. I think in a GDP world of like 2%-ish, you're going to see 8 to 10% earnings growth. So I think I can't wait to hear from the companies, and always the first ones to report are the banks. And I think that since they are at the front line of the economy, they see everything. We're going to get great real-time information about the consumer and about the industrial economy and the growth overall. And so I'm kind of excited. And in addition, the steepening yield curve should help at not this quarter, but net interest income and net interest margins next quarter. So I think maybe guidance might be better than people think on that front. But overall, investment banking fees should be up double digits. M&A completed transaction volumes up 17% year over year in the quarter. Equity capital markets are up 9%, and debt capital markets up about 17%. All of this should lead to better earnings. You know, these companies successfully had the results of the stress test. They successfully passed. That's a good thing. And I like Bank of America and Morgan Stanley. They actually both raised their dividends 8% and 9% respectively. You have a $20 billion buyback at Morgan Stanley that was just announced. So I think that there's real value, but I'm also really looking forward to listening to what the companies say on a real-time basis.
And we know it comes after the banks, and that's everybody else. It's going to be earnings season again, isn't it? Are there macro themes there that you can give us in like a minute?
Yeah, I mean, I think it's going to be very interesting to hear from the industrials because they've actually held up pretty well. And I want to hear about the themes about power, grid, electrification, the backlogs, the bookings. That'll be important. Technology, of course, is very important. Anything AI, but anything cybersecurity is also piquing my interest, and a PC upgrade cycle. And on the consumer front, I'm going to watch for discretionary spend and where we see the consumer in that regard.
All right, Steph, and we've seen the highs in the 10-year now. Do you think near term?
I think we definitely have seen the highs in the 10-year, but I think what's more important to watch, Joe, is the steepening yield curve. And I think it's because of the Trump possibility of him winning the election and his growth policies going forward. We'll see. We have a long way to go, though, on the political front.